Well, guys, we've got some really interesting news today. It's been one hell of a ride with the stock market today, particularly around GameStop, AMC, Costs, Bed Bath & Beyond, BlackBerry. All of these different stocks have been on a wild ride today. And I want to talk about Robinhood specifically because a lot of people are really upset about what Robinhood decided to do today. Unbeknownst to anybody else, they just decided to turn off the ability to purchase these volatile stocks. They basically said, look, we're not going to allow you to buy more, but we are going to allow you to sell them to close out positions. And this made a lot of people really mad because it's one thing if the stock gets suspended for trading, and if the stock market as a whole suspends that stock because of extreme volatility, that's understandable. Nobody can do anything, right? All of the stock exchanges or all of the brokers are unable to trade that company at that time until it resumes trading. But with the case of what Robinhood did today and what other brokers did as well, such as TD Ameritrade, E-Trade, and the like, they actually just turned it off and said, nope, we're not going to let you do that anymore. And it absolutely crashed the stock today. To be honest, the stock crashed pretty heavily, but did end up holding most of its power, having been up still, 400 or 500% over the last couple of days, maybe the last week or so with GameStop particularly. But this is an absolutely weird time that we're living in with all of this stuff going on. I mean, it's one of those things where it's just kind of crazy to see that this is happening. And Robinhood, to not even give anybody a heads up or a warning that this is going to happen, in my opinion, is totally out of bounds. I think everybody's complaining about, hey, this is market manipulation. The hedge funds are losing money because they decided to short a stock. And, unfortunately, when you play the game that way, you have to play the game such that if you lose, that's what you got into, right? You can't just change the rules halfway through, whether Robinhood was directed by these hedge fund managers that's what they're going to do, or they did it on their own account. It doesn't really matter. I think everybody's upset because, look, now the game is changing, or the rules to the game are changing, halfway through the ninth inning, right? It's kind of one of those things where you can't just switch this up on everybody as soon as the retail traders start making money and the hedge funds are losing money. Perhaps the hedge funds shouldn't have, shorted the stock in the first place. Obviously, there's some restrictions and there's some transparency that needs to come about because of this. I think it's kind of weird that you can actually short, you can have a short interest that's higher than the available amount of shares available to be traded. So you can have 130% short interest. This means there's more shares shorted than are actually available to actually trade. So this is one of those things that's just really weird to me. That doesn't make any sense, right? Of course, there's going to be extreme risk when you do that. And with the nature of shorting, you go through these short squeezes where, again, there is extreme risk and you can run into margin calls. So you have to be very careful. The hedge funds should be very careful about this, but they should also know that, hey, they do run that risk. They accept that risk. And with their level of complexity and how, complex they are with their investing, they know these risks. They know that they're out there. They've got, computer systems and algorithms to basically run all these numbers for them, saying, get in here, get out there. If we have a little loss here, that's okay. We'll make it up over here. I mean, these guys are so complex that there's really no way that in most circumstances they can compete with a retail trader. So in that instance, yeah, they should probably be under more scrutiny and should have to accept those losses. If they lose that money, that's on them. Unfortunate, but they played the game and they lost, right? That's just the way I see it. So I actually want to take a look at this email that I got from Robinhood here on my computer with you guys. So it says, "Hi Cody, it's been a tough day and we're grateful to you for being a Robinhood customer. In light of the extraordinary market conditions this week, we temporarily limited buying for certain securities this morning. Starting tomorrow, we plan to allow limited buys of these securities. We'll continue to monitor the situation and may make adjustments as needed." I think it's a little frustrating because they don't give you any clarification as to what that actually means. What does limited buys mean? Does that mean you get one trade? Does that mean you can trade up to $1,000, $10,000, $100,000? Does that mean options are not available? Like, what does that actually mean? People need to know this stuff before you go into it, right? It says this was a temporary decision made to best continue serving you. Not quite sure about that, just springing these new rules on us halfway through the game. And that was not an easy one to make. We know it's led to frustration, confusion, and wanted to provide you some clarity. Yeah, I don't see any clarity here, guys. Can you give us some? As a brokerage firm, we have many financial requirements, including SEC net capital obligations and clearinghouse deposits. Now, I'm not going to pretend that I know exactly what all of those rules are and what they have to do between Robinhood and the SEC and, the requirements that they have between those two firms. But I mean, honestly, I don't know. To me, the fact that they will allow selling but they won't allow buying doesn't make any sense. If Robinhood has to clear something up with the SEC, let that happen, but don't ruin the free market that retail traders have just because of that. That doesn't make any sense. It bugs me. So some of these requirements fluctuate based on volatility in the markets and can be substantial in the current environment. Yeah, that's interesting that it was, not shut down on the day that GameStop rallied the first two times, right, after a short squeeze. So that's a little interesting. These requirements exist to protect investors and the markets when we take our responsibilities to comply with them seriously. I can say, okay, at least they allowed you to sell, right? At least they didn't just take the stock off altogether, because that would have really pissed people off. A lot of people would have lost money. So at least you still have the ability to cash out. But unfortunately, that still doesn't mean that they're not changing the rules to the game here. To be clear, this decision was not made on the direction of any market maker. We route to or other market participants. So there was actually a rumor going around that Citadel, I believe it was Citadel, had that somebody started a rumor, some fake news or something, that said, hey, Citadel told Robinhood to stop allowing these trades right as they loaded up on their short bets on GameStop, so they can make some money. Obviously, I don't know. I think both of those companies have come out and said, no, we did not, that was not what happened. So I think there needs to be a little bit more transparency in this whole thing. I think that's the thing that we're really lacking among hedge funds, among the SEC, among retail traders. I mean, among everybody, we just need a little bit more transparency, and we need a heads up when these things happen. If Robinhood came out and sent this email today and said, hey, starting tomorrow, we're going to not allow you to buy, or we're not going to allow you to sell, that would be one thing. That would be totally understandable, right? Because it goes within the terms of their service. I believe that Robinhood has the right to say, yes, we want to, we're going to let you do business in this fashion. I think as a business, you do have the ability to kind of set the rules. However, you can't change those rules halfway through the game. You have to give people a heads up, and you have to, there are some limits as to what you can actually do. So I think it is fair, that Robinhood could say, hey, we're not going to allow options on our platform, just in general, right? I'm not talking about with GameStop specifically, but if they just had, started up and said, hey, we don't do options. We're just for the little guy who just wants to buy a couple shares here and there. Cool. That'd be totally fine, right? I think they've got the right to do that. But coming into this and saying, hey, you can't buy, but you can only sell, clearly when that only benefits the hedge funds who are shorting this particular company, it's just a bad situation all the way around, guys. So with all that being said, thanks so much for watching me ramble on here a little bit about this. Hope you enjoyed it. Catch you in the next one.